Hey everyone, welcome back to Capital Markets Quickie. I'm your host, Endrit Sella. Today we're diving into a dramatic day on Wall Street, so let's get started. U.S. stocks tumbled across the board yesterday after the July jobs report showed a further cooling in the labor market. This fueled concerns that the Federal Reserve's higher for longer interest rate stance might end in recession, and that the central bank may have waited too long to start lowering rates, which has often been the case in the past. The tech-heavy Nasdaq Composite dropped 2.6% after the jobs report's release, plunging the index into correction territory, which is defined as a more than 10% drop from its recent high on July 10th. The Dow Jones Industrial Average slumped 1.5%, or more than 600 points, while the Standard & Poor's 500 sank 1.8%. All three major indexes recorded weekly losses. The Standard & Poor's 500 and the Dow each fell 2%, while the Nasdaq shed 3%. The Russell 2000 fared even worse, posting a weekly loss of about 6.8%. On Friday, new data showed the U.S. economy added fewer jobs than expected in July, while the unemployment rate unexpectedly rose to 4.3%. These additional signs of a slowdown in the labor market are likely to feed recession fears and increase rate cut expectations. Traders are now pricing in 3 rate cuts this year, in September, November, and December, with bets on a 50 basis point reduction in September. The yield on the benchmark 10-year Treasury dropped further below the 4% level after the labor market update, trading around 3.79%. News on individual stocks was just as downbeat as the economic data. Chipmaker Intel's bruising earnings report added to the pressure on stocks amid questions about the payoff of AI investments for big tech. The chipmaker said it will slash jobs and suspend dividends after its sales forecast fell short and it missed on earnings. Intel shares sank over 26%, dragging other chip stocks down with it. Meanwhile, Amazon stock slid almost 9% on the heels of sales guidance that undershot Wall Street estimates. Apple shares were a relative winner, up less than 1% after the company beat on earnings, even as it reported a slide in iPhone sales. Stocks kicked off August trading on Thursday with a sell-off after a clutch of data showed cracks emerging in the U.S. economy, wiping out gains spurred by expectations for a September interest rate cut. This has left Wall Street wondering whether the economic slowdown shown in recent data means the Federal Reserve has kept interest rates at historic highs for too long, risking an economic downturn. That's all for today's Capital Markets Quickie. Thanks for tuning in. I'm Endrit Sella, and I'll be back on Monday with all the latest market updates and important events in the week ahead. Have a great weekend, everyone.